extremely happy given the kind of access that it gives to the US markets. And for those who already had their businesses in the US, clarity on tariffs as well. And now I guess it's back to business as usual. The Nifty still holding on to its gains, 25,776. We'll take a very quick break, continue with our reactions on the other side. But before that, let me also welcome board Rakesh Sharma, ED at Bajaj Auto, to try and understand if anything changes for them, because already their Motan sales on a monthly basis have been extremely cheery. So Rakesh, I guess it's a better business outside of the US deal, outside of the budget. It's all gung-ho for you in any case.
Well, for the moment, yes. I think the larger story is that the impact of the rationalization of GST has sustained itself beyond the festive and really pushed up the industry's growth to double-digit levels. And not just the growth, but I think the quality of growth is very welcome because it's the higher-end products, the differentiated products, the more expensive products, which are growing much faster than the entry-level products. And from a Bajaj Auto point of view, this is very welcome because our whole portfolio pivots on the point of upgrading customers, and this gives us a positive environment, a supportive environment to play out our innovation-based strategies.
But tell me, Rakesh, now that we do have a deal in place with the US and you've had about 1 to 2 exposure in total exports right now to the US, does that now change anything for you strategically?
Well, see, as things stand now, we export KTM, those products which we manufacture for KTM Austria in India and also for Triumph. And these collectively account for only 1% of our total exports, which are largely focused on to emerging markets. So when the duties increased, it did not have a material impact on our overall financials of exports business. And so when the duties are reducing, again, there will not be such a significant impact. But having said this, as part of a larger initiative which we have ongoing with, particularly with KTM Austria, is to expand our production in India. And through that initiative, we do anticipate that more and more exports will flow into the US. So with the duties coming down, it becomes commercially more attractive and justifiable to expand manufacturing for KTM in India and export to the US. So that way, it's a positive thing. But from an overall Bajaj Auto exports point of view, it's not a very significant impact on us.
Rakesh, if you can give us a sense of, India has been doing multiple FTAs across geographies and blocks. We had the India EU, which has happened. There is also the Middle East, which is there, then Australia, New Zealand, and we have various trade agreements with the ASEAN region as well. How has these helped companies like you to expand into these markets? Is the exports getting better, easy access and better markets because of that?
Well, see, the trade deals have been announced, but these have yet to come into play. As you know, that the largest one of them, which is the EU, will take almost, 7 to 12 months. And then we will start to see an impact. But again, from an exports point of view, particularly of our sector, motorcycles, the duties in import duties in EU were already at quite a low level. So again, it doesn't shift the whole thing too much. But yes, what happens is that when you have these multiple FTAs, every little bit counts. And actually what happens is that the whole world starts to become your marketplace, and it allows us to build scale. We are largely emerging market focused. 95% of our business is in emerging markets. But any progression, it happens. For example, high-end products, etc., being able to export them through taking advantage of these FTA deals does contribute towards building up scale. So even though it may at an overall level not shift the needle too much for somebody like us who's focused on to emerging markets, but some of the product segments which are high end will certainly get benefited from the scale which gets opened up because of these FTAs.
Rakesh, I just want to also get your thoughts on the January numbers. How are the numbers? You briefly spoke about the fact that GST 2.2 led demand is holding on. What is the kind of inventory that you are holding at this point in time? Is there are you seeing upgrading which is happening to higher models which as part of this entire GST changes which have come in? And is that sustainable?
Yes, that's what I said, that, it was important to watch December and January. And of course, there is a mini festive which happens particularly in Tamil Nadu, and retails do get bolstered because of that. But I think for an industry, which is the motorcycle segment, which was in decline till August, and then shot up vertically during the Diwali season, it did not sort of tumble down, and it has sustained double digits. So it portends well for the industry. Now, whether it will be sustaining at 15% or be 12%, we have to look at that. But the shift from marginally negative to strongly positive is a very, very good shift. And I would say the real thing to watch out is inflation. We know that the rupee is devaluing, and if that sort of creates inflation, then that erodes the purchasing power of for our customers. Rental inflations, property inflations, fuel inflation, all these things go towards eroding the purchasing power. But if these are controlled, as the attempt is of the government of India, then we will see a longer life for this GST-led revival. And as part of that, like I said, the upper half of the industry is doing much better. The customers who got stronger wallets have become more optimistic, and they are taking that one extra step in upgrading to brands and products which they were aspiring for. And this is very, very supportive for a company like ours, which is constantly trying to, have in its portfolio the higher end propositions for the customer. So inflation is something to watch out for. But if that is in control, hopefully this will sustain itself. On inventories, I mean, our inventories have been on a normal, we have a two-tier distribution and in motorcycles, and then inventories are at absolutely normal levels. In fact, I would say that in three-wheelers, which is also witnessing, a very good, strong revival, particularly even in the ICE segment, our inventories are running a tad lower than where we would like them to be.
Mr. Sharma, hi, this is Harsh joining the conversation. Talk to us. Your margins are obviously industry best. What I want to try and understand is sustainability or upside from here. Give us some thought on that, or give us the direction of how you're thinking about that number.
Yeah, so our focus is always, trying to maximize top line, but not at the cost of the bottom line. And we will continue in that way of management. It is you have to manage this very, very dynamically, taking into account all the factors. There has been some cost side inflation, particularly in noble metals and all that, but mitigated to some extent by flattish steel prices and rubber and those kind of things. And acknowledging that, we did take a price increase, less than 1% or so, in January, and that is sort of offset it. And going beyond that, that the softening rupee now above 90, the realizations are above 90. is also very helpful in mitigating. So for us, because of these factors, the cost side urgency is not there. But having said that, one is always monitoring competition and opportunities to improve profitability without hurting demand. So our triggers will come more from that side rather than the cost side in the immediate next few months.
Okay. Thank you so much, Mr. Sharma, for joining us and giving us that perspective. Of course, Bajaj Auto, very, very strong set of numbers when you're looking at the domestic growth for January 2026.